Tracy, if you're there, can you hear me?
Good morning. I can hear you.
Great, thank you. Good morning, everyone. Well, one clock on mine says it's 9 o'clock and one says it's 8:59. So I will slowly put us on the record again in proceeding number 25A-0385W. Are the parties, we left it off yesterday that I believe the parties were going to begin with having Mr. Borquette testify. If any party has a different understanding, speak up now. Looks like otherwise, I think we're ready to proceed. Mr. Dietz, would you mind tendering your witness for cross-examination?
Yes, Your Honor. Mr. Borquette is ready for cross-examination. Last night, we did go through the demonstrative HE 305, and we have a handful of corrections to make to that document, and we're uploading that to Box now.
Okay.
So at some point, once it's uploaded to Box, I'd like to be able to, we could do it on redirect, or another point in time that's convenient for Your Honor to walk through those corrections in the record.
Great. That sounds good. Thank you. Well, we could do it when it seems most natural. So just let me know when it seems to you that it would be the best place to do it.
Okay, I will let you know. And in the meantime, Mr. Borquette's ready to be sworn in.
Thank you. Mr. Borquette, would you please raise your right hand? Do you swear or affirm under penalty of perjury to tell the truth, the whole truth, and nothing but the truth?
I do.
All right, please proceed. And I believe we were having Cascade question first. Is that correct?
Yes, that's my understanding, Your Honor.
Right, thank you. Yeah, Mr. Davidson, go for it. Thank you.
Thank you. Good morning, Mr. Borquette.
Good morning, Mr. Davidson.
Yeah, I'm Mark Davidson, counsel for Cascade New Vision in this proceeding. And I'm going to ask you some questions today about your answer testimony, Exhibit 300 in this proceeding. So I'll probably limit most of my questions to that testimony. I hope you have a copy in front of you and we can pull up various aspects of it if you need that. Is that okay?
Yeah, let me just grab my testimony. It's in another file.
Okay.
Oh, I can see it on the screen, so I guess that's fine. Yeah, I can see it. Yeah.
Either way, just want to make it easy for you to reference.
Okay.
First of all, Mr. Borquette, are you a full-time resident at Cascade Village?
No, I'm not.
How much time would you say you do spend at your place at Cascade Village?
It kind of varies. I mean, this year there was no snow, so I probably maybe 6 to 8 weeks, possibly.
And do you rent your property the rest of the time?
No.
So it's for your single use?
I share it with one of my sons.
Oh, okay. Thank you. And you're the treasurer of the Cascade Village Condominium Association, is that correct?
Yes, I'm the volunteer treasurer of Cascade Village Association. That is correct.
You're the volunteer, so they don't pay you, I take it.
I want to make that very clear. I don't get paid for anything,
Okay.
Mr. Davis.
How long have you been the treasurer?
Oh, it seems like a lifetime. I don't know, 4 or 5 years.
Okay. And this is the first time you've provided testimony on behalf of the association at a PUC hearing, as I understand it, correct?
That is correct.
How long have you owned do you have a condominium at Cascade Village?
Your Honor, at this point, I'm going to object. This is not relevant to Mr. Borquette's testimony about this case. He's going pretty far down the line of talking about his own personal residence.
I will allow it to a certain extent. I do think it provides some background that could be useful or helpful. But yes, Mr. Davidson, to the extent you could limit these types of questions, that would be great.
Yes, Your Honor, I'm almost done. I just want to lay a little bit of a foundation here for Mr. Borket's testimony. Thank you. Let's see. Oh, I think I asked you how long you know, whether you were a condominium owner or a single homeowner at Cascade Village property.
I own a townhome.
Townhome. Okay. And how long have you owned your townhome?
I think it's in my testimony. It seems like 5 or 6 years, but I think it's in my testimony. Sorry, Mr. Davidson.
I didn't see it, that's why I asked, so I'll look for it.
Yeah.
Now, at page 10 of your testimony, which is Exhibit 300, you state that you're testifying on behalf of CVCA, and we've also referred to that entity in this proceeding as the association, as an accountant and not as someone familiar with water and sewer utility rate making. Do you see that at lines 5 through 8 there?
My testimony is limited to my expertise as an experienced accountant and not specific to rates or rate design, where I discuss elements of rate making law or policy that is on the advice of counsel. That is correct. That's what I wrote there.
Okay. And then at page, just look for 7, I believe, of your answer testimony, you testify to your position that
Just so everyone's aware, this document does not let me go quickly to pages. Something's wrong with the page numbering. So every time you ask for a page, I'm going to have to manually click there. So it's just going to take me a little bit longer.
okay.
But I'm on page 7, so go ahead.
All right. There at page 7, Mr. Borket, at lines 14 through 15, you state your belief that Cascade's current rates should be reduced. Do you see that reference?
Yes, I do.
Now, prior to preparing your testimony for this proceeding, have you ever filed a complaint at the Public Utilities Commission regarding the rates of Cascade?
No, I've never filed anything with the PUC regarding rates at my homeowners association.
All
That
right.
is correct.
So from that testimony, is it fair to understand that until the filing of this rate case, you were satisfied with the rates Cascade charged you for water and sewer service?
Satisfied is an interesting question. I've always thought them too high because I compare them to my home in Scottsdale, Arizona, where I'm sitting now, which, as you know, is in a desert. I have a single family home and I do have irrigation. And my average bills here, well, I haven't had a bill over $100 a month, and that's in Scottsdale, Arizona. So I'd have to say yes. I've always felt they were too high, but to be honest, I did not know what action I could take. So obviously I didn't. I just accepted what they were.
And that's been for the last 5 or 6 years since you've owned your property, correct?
Correct. Comes out of my bank account automatically each month. I don't even know I'm paying it, Mr. Davidson.
And that's because those rates are fixed for both water and sewer service, correct?
That's what it says on the invoice, yes.
Yes, and there's no adjustment for those rates based on your consumption or lack of consumption, correct?
That is absolutely correct.
Okay.
Absolutely.
And you suggest at pages 17 to 18 of Exhibit 300, and we'll pause for just a moment here. There we go. That the commission should approve a quote industry standard rate of return of 10% on invested capital. Do you see that reference? Should be at lines 17 to 18.
Moving.
Sorry, I'm trying to find it for you. What lines?
I had it at 17 through 18, Ms. Federico, but I think this is maybe a little different version of Mr. Borkett's testimony. Let me just ask it this way. Do you recall making that statement in your testimony, Mr. Borkett?
Yes, I do.
We can move on. So with respect to this industry standard of 10% return, based on your experience as an accountant, not someone experienced in utility rate making, how did you come up with that utility industry standard?
Well, I think I said earlier in my testimony that I'm only here talking as an accountant, and then anything else to do with rates or rate setting, I relied on the advice of counsel.
So counsel told you that industry standard was around 10% for an authorized rate of return?
Mr. Davidson, I've been doing this for 6 months. I can't remember exactly what was said. As I said, it's been half a year working on this project. But yeah, 10%, I have to say, to me, 10% doesn't seem unreasonable, but you're correct. That's why I put it in there.
All right. At page 8 of Exhibit 300, you request that and this is still in the summary of your testimony. We'll get to the rest of it in a moment. I just want to hit some of these points in the summary. You suggest that the commission order the land on which the wastewater treatment facility sits to be transferred to CNV. Is that correct?
So regarding the land for the wastewater plant that is subject to the exorbitant affiliate land lease, the commission should order the land to be transferred to CMV, and no further rental payments are owed or greatly reduce the land lease payment to a fair market. Yes, I agree with that.
Okay. How do you envision the commission would order that transfer of property?
Objection, Your Honor, calls for a legal conclusion.
I'm just asking for his understanding based on his testimony.
Remember, you could go ahead, Mr. Davidson, but I don't like the back and forth because it quickly escalates so frequently. But go ahead, Mr. Davidson. What were you saying?
I was just responding to the objection, Your Honor. I apologize for jumping ahead. I was just asking for his opinion based on his testimony where he suggests that this transfer should be made. And I'm not asking for a legal conclusion. I'm just asking how he thinks it has to be done.
I think under the circumstances, given that it is what his testimony was, it's an appropriate cross question. I will give it the weight of his answer, the appropriate weight, because Mr. Borkett isn't qualified as a legal expert, but I think it's a fair question under these circumstances, so I'll allow it.
Do you remember the question, Mr. Borkett?
Sorry?
Do you remember the question?
Oh, yes, I do. Am I allowed to make some observations before I answer it? I don't know what the rules. I've never been in one of these hearings before.
I'm really not asking for your observation, just your understanding or your thought of how that the commission would order the transfer of property from to Cascade for where the wastewater treatment facility resides.
Okay. Well, I can't opine about what the PUC can and can't do.
Okay.
I believe in this case the fair thing to do, based on the information I have available, which suggests to me, and it's part of my testimony, that the value of that land or the purchase price of the land was $102,283, which is in my testimony. And bearing in mind that the lease is $180,000 a year. So in fact, the lease payment pays the land cost off in 7 months. I would not think it's unreasonable for that land, which is owned by, I believe, by Moorhead, and Moorhead, I believe, owns Cascade New Vision and Grizzly Peak. I would not think it unreasonable that the land should be transferred at cost to Grizzly Peak, and a Grizzly Peak would pay for the land at that price. And then when it's transferred, the lease would be eliminated, and all those payments that have been accrued, none have been paid yet, would be taken off the books. And I think that would be a fair way of representing how the land is used in the utility.
All right. And based upon the preparation that you've done over the last 6 months, did you review the land lease in this proceeding?
Yes, I did.
And did you see anything other than the amount of the lease, which I think you object to, that would lead you to believe that that lease is not an appropriate way for a utility to do business as far as leasing land it doesn't own?
I think it really comes down to the amount of the lease, not the rationale of having a lease. I just think the value of the lease is excessive.
Okay.
And I'm happy to discuss why I think it's excessive, should you need to ask that question.
Thank you. Let's see, page 8 of your answer testimony, again, still in the summary, you indicate that you would request the commission require CNV to file its annual reports for 2023 and 2024. Do you remember that testimony?
Has it moved? Has the page moved?
I don't believe so.
Oh.
If you were scroll down to number 6, there we are, lines 18 through 19.
Yes. At the time I was studying all the figures presented, one of the gaps was the fact I could not find reports for 2023 and 2024. And I understood based on counsel that they should have been filed by the time I wanted to look at them. That is correct.
Do you also understand that they have been filed with the commission?
Yes, I have seen them now, and I have read them, and it's very interesting because part of that filing, they have to file the comparatives for 2022. And when I compare,
I just asked you if you've seen, if you know they've been filed. You can expand it on redirect if you like.
sorry, Mr. Davidson, I apologize for that.
No problem.
Yes, I can confirm that I've seen copies of them now. Correct.
Thank you.
Unattested copies, if I could say that. There's nobody signed them, but
Understood.
Yeah.
Now, at page 10 of your answer testimony, it's number 11. I think it's at the top. Yeah. You state the Cascade should be required to undertake what you refer to as a third-party study analyzing CNV's possible connection to Purgatory Metropolitan District's existing and nearby WWTP as an alternative. Do you see that reference?
I do see that reference.
And who would, in your opinion, who should pay for the cost of that third-party study?
Well, I think it would actually be the benefit for both parties, both for the utility company and in the long term for the homeowners.
Okay. So do you suggest that the cost of that analysis would be shared by the condo owners association and the utility? Is that your testimony?
I just just caveat to that. As an accountant, I don't like to commit my homeowners association to any costs until I know what those costs are. So I think I would want to see what the costs will be before I would commit the association to that payment. Because as you know, legal fees can be extremely high, and we're just a small association. And and as I'm the treasurer, I have to find the money to pay our legal bills, and I wouldn't want to have any more burden upon me than I already have. Does that make sense, Mr. Davidson?
Yes, thank you. Now, Mr. Borquette, do you know when we're going to move on from your summary now. Do you know when the water and wastewater rates for Cascade were last revised?
That's a very good question, because I've looked and I've seen a document, I think it was a 2012, but I could never find a document that actually did an analysis of how those rates were arrived at to suggest that those rates were even valid back then. So, as I say, I don't purport to be an expert in
So-
PUC, but I did see the 2012, but I didn't see the basis for it. I couldn't find the basis.
With respect to the validity of those rates, if I represented to you that that document you may have reviewed was the tariff was approved by the commission for the utility, would that jog your memory as to what that document may have been?
Oh, clearly. Yeah, I remember seeing the tariff,
Okay.
but I didn't see any supporting basis for the tariff. So I couldn't opine on the tariff per se, other than to say I saw the tariff.
Right.
I mean,
I'm not asking you for the justification for the tariff, just that it was in place as of 2012, correct?
I understand, Mr. Davison, you're correct.
And it hasn't been changed until the request made in this proceeding by Cascade, correct?
To the best of my knowledge, that is correct.
Okay. Would you agree with me, Mr. Borket, that the cost of operating and maintaining the Cascade utility facilities have increased since 2012?
I can't really give an opinion on that because I haven't looked at every financial since 2012. I don't know how it was operating over those years, whether they've managed to, as all good accountants or businessmen try to, ensure there's more efficiencies to actually run the business more efficiently. Logic would say there's been inflation. I totally understand that, but a carefully managed business sometimes can actually avoid those impacts.
And in your opinion, can it avoid those impacts over the last 14 years?
I'd really have to see line by line item to make that determination.
Okay. Is there an industry standard you're familiar with for applying inflation to costs over a period of years?
Which industry?
Utility industry standard?
I have no knowledge of the PUC rules.
Okay. At page 22 of your answer testimony, you state that the memorandum prepared by the accounting firm L.B.&J., which is included as attachment CLM 10 and has been discussed at some length in this proceeding, is a compilation. You remember that part of your testimony?
Correct.
And as I understand, if I understand your testimony correctly, you say that your conclusion that the LB&J memorandum does not reconcile with annual reports filed with the commission, correct?
That looked to my specific testimony, but yes, that was my issue.
Okay.
None of the reports I provided with over the 6 months seem to reconcile, and I think that's one of my exhibits.
Okay. So in your experience in the accounting industry, is it normal for companies to restate or amend their financials periodically for a variety of reasons?
I think there's more of a fundamental question here, Mr. Davidson, because as was admitted, and if you saw the original rate filing, those accounts weren't even filed on a consistent basis. when I first looked at them, I was so confused by why nothing reconciled, which is part of my testimony.
Hey, Mr. Borket, sorry, I got to stop you again. I just
No,
asked you, in your experience, it's normal for companies, not even utilities, just regular businesses to periodically or occasionally amend or restate their financials for various reasons. Yes or no?
Not in my experience to the extent of these adjustments. I mean, these adjustments are so significant. So I'd have to say, I'd have to caveat my answer, really, because if it was adjusted for a small amount, yeah, but these amounts are huge adjustments.
So it's a matter of degree, correct?
It's totally a matter of degree. Can I just make one other comment while I'm thinking?
You can when Mr. Detsky has his turn.
Okay, that's very good. Yeah.
No question pending. Thank you.
Okay, Mr. Dick, understand.
Thank you. Now, you indicated that you had reviewed the annual reports of Cascade for 2023 and 2024, and the report from LB&J in CLM attachment 10 as part of your preparation for your testimony here today, correct?
Correct, yes.
Now, setting aside your opinions regarding the
Can I just bring up my worksheet to make sure that answer is correct, to see if they have them on the worksheet? Can I do that?
well, I'm just asking if you've reviewed those. I think you told me earlier you'd reviewed each of them.
So I have reviewed them. Yes, yes.
That's the question. Thank you. So setting aside your opinion as to the variances in the numbers between those three documents, 2023 annual report, 2024 annual report, and the LB&J report. I'm correct, am I not, that each of those documents show that the utility is operated at a loss over the time period referenced in those materials, correct?
If I go back to the original rate application page, attachment 4, page 1, that showed over the period 2022, 2024 that they actually made a significant profit.
Mr. Bork, please, I asked you about the three documents that I put in my question. In your review of those, do you agree with me that at the bottom line, profit and loss, each of those documents shows a loss for the operation of the utility for the time frames referenced?
Yes, it now with those additional costs, they now show a loss. That is correct.
Thank you. Now, over at page 27 of your testimony, you state, let me find it here, that ratepayers are being injured by false accounting that is using the backs of ratepayers to repay investors. Do you see that reference at lines 12 through 13?
Correct.
Okay. What do you mean by false accounting?
I think I have to answer that in the context of my discovery requests. If you go back to my discovery requests, I took the original information and asked for documentary evidence. And I have not received, for 6 months, any supporting information for any of the financial data provided. And I think there's a term for what was asked. I think it's identified with particularity. So in 6 months, I have had no information to support any of the figures presented. except for the lease and except for the promissory notes. So in terms of,
Excuse me, Mr. Borket, I think you maybe left out the annual reports that we talked about a moment ago and the LB&J report as financial information that you said you've reviewed as well, correct?
when I did this testimony, I hadn't seen the recent filings.
Okay.
So I can't comment on those.
And with respect to not receiving documents you think you're entitled to, there was no follow-up motion to compel filed by your counsel or anything to further request the production of those materials that you're aware of, was there?
Objection, Your Honor. Calls for a legal conclusion.
I could add more comment to.
Again, I do understand the basis for the objection, and I will allow Mr. Borket to provide a response to this. I understand he's not an attorney, and so I'll give his response the weight it's worth, but I will allow the question. Go ahead, Mr. Borket.
Yeah, just repeating what I mean, false accounting. I think in addition to having no documentation to support any of the figures, the other thing I think you're aware of is that those figures, particularly the other ones, weren't even in accordance with GAAP. You were providing me, and you provided me in the rate application, 2 income statements and a balance sheet, which did not reconcile. And I was told later that was because the balance sheet and the income statement were calculated on different bases. One was on a cash basis and one was on an accrual basis. And something I'd never seen in my whole career, anybody presented that. So on that basis, I would say, yes, that's false accounting.
Okay. And okay, that's the basis of your statement as to what is false about the accounting?
Correct.
Right. Okay. All right, let's move on to page 38 of your answer testimony and the tables that appear there. And in this version, it's page 38 and 39, table WB-8. And, oh, I'm sorry, the other table is on page 40, WB-9.
I can't show them both just based off.
Yeah,
So
that's
you're going to have to direct me between the two.
okay. So let's look at WB-8, lease document not reported. Here, I'm just confirming that the annual reports rent, where you say no report filed for 2023 and 2024, you've now seen those annual reports, correct?
Correct.
And I think the same reference shows up in the WB-9 table on page 40. Let me take a look at that real quick.
I think in this version, it's actually on 41. Oh, no, 40. You're right.
Yeah.
Is this the right one?
Yep, that's it. And again, the PUC annual report for 23 and 24, no report filed. I guess we can agree those have been filed with the commission, correct?
Is that a question?
Yes.
Yeah. Yes. Correct. They
Now,
have now been.
Yeah, go ahead. What's
I
that?
said yes. They've now been filed. Though they weren't attested, which I thought was interesting.
Okay. Let's go to page 39 of your answer testimony. Lines, starting at the question at line 7. The answer there, thank you. You provide your analysis of what you assert is a, quote, reasonable rental value for the property where the wastewater treatment facility is located. You see that reference?
Yes, I do.
Do you believe that the utility should receive a discounted rent for use of that property? Or just a different value than you've referenced here?
You know, I think it's, and speaking as a homeowner as well, having to pay for this, based on the purchase price of $102,000, I believe the owner of the land certainly has a right to charge a lease for that land if it's not owned by the utility. Of course, I'd love for the land to be transferred to the utility and the utility pay for it.
Right.
But that said, yes, for $102,000 purchase of land, there should be a rent payment, and I estimated 3,000 to 5,000, but that was just based on my research. I would defer to somebody who actually has more experience in leasing properties, but I don't think $180,000 would not be a rent that I would think would be sustainable for that purchase price.
If a new wastewater treatment facility were located on that same property, do you have an idea what it would cost to construct a facility like that?
Absolutely no idea.
Okay. Would, just based on your experience, would a new facility make the property where the current wastewater treatment facility is located more valuable if there were a new facility built there?
Well, Mr. Davidson, if it got to that point, I would have to say as a homeowner, rather than investing money in that piece of land, I would want to be attached to the purgatory system. But that's probably not your question.
It's
Can
not.
your question again? Sorry, I wandered off a bit.
Thank you. If a new wastewater treatment facility were built on the property where the existing facility resides at the moment, would that, in your opinion, make that land more valuable?
No.
And that's because it would still be used for the same purpose?
No, because I'm looking at a situation where the land was bought for $102,000, and I think that the land is owned by Moorhead. If I'm not mistaken, Moorhead 1. And I thought I heard yesterday Moorhead 1 actually owns Cascade New Vision that owns Grizzly Peak. So they're really just the same company. So I don't think it changes the value of the land based on the affiliate relationships.
Would you agree with me that the existence of the wastewater treatment facility on that property makes it unique and of higher value than if the property were just bare land?
No, not at all.
Okay. Over at page, right reference here. Yeah, page 37 of your answer testimony. I'm sorry to back us up here. You have a reference at section B down a little bit further toward the bottom of claimed expenses as unreasonable, and then this part of your testimony contains your discussion of those expenses, correct?
Can you roll on to the next page?
Sure.
That's correct. Yep. Yep.
And am I correct that you're just using the numbers included in your testimony, not determining whether the expenses should or should not be included for the rate making of the utility, correct?
I don't really understand that question.
Well, you use these values that you found in the materials that you've reviewed, correct?
This is the information you provided in some of the iterations, some of the changes of the data. That is correct.
Okay. But you're not suggesting that the information, the values that are listed here, whatever they are, shouldn't be included in the development of rates for a utility as individual categories, correct?
Let me go through them. If a utility has to lease the land it's on, that was obviously an acceptable expense. as long as it's, arm's length and it's not above market. Intercompany labor cost, well, once again, if it's demonstrably proved that a person is actually working for the other company and they demonstrate such by maintaining timesheets and it's properly supported and it recognizes the work they're doing, no issues with that. In terms of intercompany interest, that's a whole different animal because that really is a function on what the interest cost is actually calculated on. And that I think becomes more of a PUC discussion point than I can opine on that.
Okay. And while you criticize, I'll say, the values that you've used here in your discussion, you did not conduct any market comparison of the costs that you reflect here, did you?
Well, in terms of the land lease cost, I tried my best to find information that would support, my coming back with an opinion. Clearly, the basis to start with for the land lease is what I consider the cost of the land, and that's huge. As to the returns expected on that cost, whether it's 5, 6, 7%, it could be within that range, but it certainly doesn't come up at $180,000, which I consider is totally excessive for such a small piece of land, my opinion. In terms of the intercompany labor cost, I can't opine on that because despite requesting information, no information was provided. And regarding the intercompany interest cost, well, once again, I'm not sure under PUC rules what interest actually goes into being treated as a cost of running the operation as opposed to something else.
And with respect to the labor costs, I think you told me you had no basis upon which to determine the accuracy of those costs. Did I get that correct?
We requested it in discovery, Mr. Davidson, and they basically, if I recollect correctly, that they were not willing to provide that information.
But you didn't do a comparison on your own, did you, of labor costs in the area?
Well, it's impossible because I don't know who was doing what.
Okay.
Intercompany labor cost assumes there's somebody working for one company who's told to go into another office and work for that company. Well, there is no sort of comparatives because there are no sort of comparatives. It is what it is, right? Does that make sense? Does my answer make sense, Mr. Davidson?
Sure. And you did not evaluate the impact of regulatory requirements on the company's cost structure as part of your analysis, did you?
Objection, Your Honor, calls for a legal conclusion.
I'll allow it for the same reasons from before.
Oh, can you repeat the question, please?
Yes, you didn't evaluate the impact of regulatory requirements. Do you see regulatory requirements, CDPHE regulatory requirements, whatever regulatory requirements on the company's cost structure, did you?
Can you be more specific as to what regulation?
Well, regulations by the Colorado Department of Public Health and Environment regarding water quality and wastewater treatment.
Oh, you're referring to remedial action that needs to take place to bring us in line with certain levels of chemicals in the effluent. Is that the question?
Well, that's part of it, but yes, that's a regulatory requirement. You didn't include that, an evaluation of those regulatory requirements in your analysis that you're presenting today, did you?
Well, can you explain what part of my analysis would have been affected by? I'm a little confused by that question.
The cost analysis that we're talking about here.
Yeah, what cost analysis? I never saw a cost analysis. I just saw financials. There wasn't a cost. It wasn't a cost to serve. I'm not sure what the technical term is.
Maybe a better way to put this then is you did not conduct your own cost of service study informing your conclusions for this proceeding, did you?
I did not perform my own cost of service because it would have been impossible, because I received no documentation for any of the figures you presented to me. So it would have been a completely worthless exercise. I could not have done it, full stop. not be doable.
Thank you. Now at page 41 of your testimony, at the top, lines 4 through 6. Yeah. You indicate that you're aware, in your previous role as a financial auditor, you're aware of the relative ease of the ability to manipulate intercompany transactions in accounting. Do you see that reference?
Yes, I do.
In that role that you reference performing in the past, did you ever manipulate intercompany transactions in accounting?
Myself personally,
Yes.
not that I'm aware of.
Okay. And you're not alleging that there has been a manipulation of intercompany transactions here, are you?
No, I made it very clear I'm aware of the relative ease because I've been involved in a lot of acquisitions in my past. And a lot of times when you're buying a division, you have to be very sensitive to those support roles that go or do not go with the transition. And that relates to what we call intercompany transactions. So it's a very important part of any business, particularly in acquisitions and disposals. So yeah, and I know how easy it is to do because it just is.
You're just indicating that it's something that could happen. You're not saying it did happen here, are you?
No, I'm really, because if you read above, I said no information was provided regarding hours worked, employees, or contracts, and you said that was irrelevant to the application. So at one point you said these are the costs for my allocated labor, but when I asked what they were, you would not provide the information. And I just made the comment based on my experience, exactly as I stated there. No
Okay.
more, no less.
All right. Now, page 43 of your testimony, lines 13 through 14, you assert that Cascade proposes to retroactively embed inflation in its rates. See that reference?
Let me read that a bit. The question was, should the annual rate adjustment be, if it's a,
And lines 16 through 17.
actually, I'm trying to read the question. Should the annual rate adjustment be approved if the CMV proposed is also, okay. I see. This is the proposed, CMV proposes to retroactively embed inflation and prior period costs into base rates, then applying ongoing inflation to increase.
Mr. Borket, I'm going to ask you to keep your voice up if you're going to read from.
I apologize. I'm trying to really understand the question again.
So your answer at lines, where are we here now? 16 through 17.
Yes, I see. I read it now. I can answer the question. I have to say in that case, as I'm not an expert in this area, I would, as I said earlier in my testimony, I would have relied on counsel to help me with such a statement because, as I say, I don't have any expertise in that area.
Okay. So with respect to embedded inflation, do you deny that there's been an increase in the cost of service for this utility since 2012?
Well, I don't, in terms of deny it. If I look at all the PUC reports, the profits go up and down over the years. But common sense says there's been inflation, of course, but I can't offset the inflation against efficiencies in the operation. So,
okay. So would you agree with me that the company's rates should reflect the current cost of service to its customers?
I think the current rates definitely should represent the current cost of service, and I think it's also helpful to compare those rates against our peers, just to get a feel to make sure that that our utility is running efficiently compared to other utilities in the area.
with respect to the answer to this one question, would you agree that the company's rates should reflect the current cost of service to serve its customers?
Yes.
Thank you. Now, moving on to page 44, where you you have your discussion about the annual rate adjustment. Starts in the middle of that page. Question. There it is. Question at line 10. You suggest that the annual rate adjustment should have an inherent mechanism to account for system growth. You see that reference there?
Yes, I do.
Now, would you agree with me, I guess based on your preparation for your testimony at this proceeding, would you agree that Cascade is a small water company in Colorado?
I don't know. I mean, it looks like a small utility company. I don't know any others, Mr. Davidson, so
All
I
right.
really can't answer that.
Did you review the commission's water rules with respect to this annual rate adjustment mechanism in preparation for your testimony?
No, I don't have any experience in that area, Mr. Davidson. As I said in my testimony, I rely anything to do with the rules or beauty rules. I rely on my counsel to guide me.
And so when you say that this annual rate adjustment mechanism should account for system growth, that's just your, I'll say, general opinion on how a mechanism of this type should work. It's not based on a review of the commission's rules regarding the use of this mechanism, correct?
Yes, because I think in any business, you have two components of cost. You have fixed and variable. I'm sure you're very aware of that, Mr. Davidson. And what happens when a business grows, because the fixed costs are fixed, but the revenue increases, you tend to get a much more profitable situation. So there's no question, if 72 more units were added to this facility, which I'm told has a capacity, or Mr. Master told us has capacity, there's absolutely no question they were able to spread the fixed costs like a lease over more owners, which will obviously have the effect of reducing the cost to serve those owners. So in theory, should reduce the cost, reduce the billing amounts for those owners. I mean, that's just straightforward logic, Mr. Davidson. I don't think there's any. Does that make sense?
Well, if I represent to you, Mr. Borket, that there is no provision in the commission's annual rate adjustment option for which the company is seeking approval for inclusion of system growth in the calculation of the annual rate adjustment, you have no basis to disagree with me, would you?
No, because you're telling me that, but I answered the question not based on the rules, but based on common sense and logic.
Well, maybe the rules are not based on common sense and logic.
Well, I'd have to second that because I think if I explained it correctly to everybody on this call, fixed costs get diluted when there's more owners. It's just simple mathematics, and that's if I was running it, that's what I would suggest, but I'm not.
Okay. Just give me a minute here, Your Honor, please. Now, Mr. Borket, you were just mentioning the system growth aspect of the annual rate adjustment that we're discussing here. And you just indicated that it's common sense, I guess, that more customers on the system would provide more revenue to cover fixed costs, correct?
Correct.
Okay. And are you aware that members of your CVCA board have appeared at San Juan County Commission meetings in opposition to the so-called imminent expansion of the facilities at Cascade Village that you reference in your testimony?
Objection, Your Honor. This is not relevant to Mr. Borkhead's testimony.
Well, Your Honor, I believe it is.
Can you provide a little explanation about an offer of proof here, what you tend to do?
Absolutely, Your Honor. Mr. Borket refers to the imminent expansion of the facilities with respect to the San Juan County Commissioner materials that we were reviewing yesterday during the hearing. And I'm just asking him if he's aware that despite his testimony regarding the imminence of this expansion, members of his board have appeared before the San Juan County Commissioners in opposition to expanding the facility.
Okay, I'll allow it.
Mr. Davison, I'm not sure exactly what meeting you're referring to, but I was on a Zoom call with the most recent meeting. And I think in fact, I think we've even stated that we on the board, just follow the rules and the regulations, right? And we were just being educated by the county commissioners about such things as easements, access, the environment, wetlands, rocks falling down the mountain. But I would have to say, I haven't read the notes of that meeting, but there was no outright, we don't want the development. In fact, my position as a board member and as a treasurer, if people have the right to build, we should not stop them building as long as they follow the rules and guidelines. I mean, it's as simple as that.
All right, thank you.
Does it answer the question?
It does. Turning to page 47 of your answer testimony, again, hearing exhibit 300. Let's see. Line 7 here, you state that theoretically CVCA does not oppose a change in the tap fee for the first time since 2012, correct?
Correct.
Okay. And do you agree that in actual practice rather than theory, a new customer should pay a tap fee to cover the cost of connecting to the utility system?
Yeah, absolutely. It should cover the cost of connecting to the utility system. I don't know if $25,000 is the right figure. Clearly, I don't have that expertise, but yes, there should not be a cost to the existing customers of somebody else attaching to the system.
Okay. Okay. At page 49, you state that CVCA realizes that the CNV system requires upgrades to meet environmental compliance and maintain a reliable water supply like all utilities. See that reference? It's under Roman 8, the first question and answer there.
Yeah, absolutely. I think how I see this whole situation is we are totally support everything that's done to make sure our utility meets all environmental compliance and maintains a reliable water supply because it's to our benefits. We just want to make sure that it's done and we understand what the cost is. It's as simple as that, Mr. Davison.
All right, so based on that testimony and your experience, how many utilities are you aware of that need to upgrade their systems to meet environmental compliance, have done so based upon a decrease in their existing rates as you suggest should happen here?
Well, I see two issues here, Mr. Davison. There's what I call the rates for the day-to-day, cost to serve. And then, having to do upgrades is a different situation and should be treated as such. And I have in my testimony version 2, I actually questioned, I don't know if I can say this at this time, that the current rates we have compared to our peers using the WWE format actually suggests at the moment that we're paying too much. I mean, that's just they're just the numbers, right? But I absolutely agree. We need to comply with the environment. I'm very much a believer in the environment, and those costs have to be borne by the customers, no question. We'd like to know what those costs are, and the money spent responsibly. I don't think that's unreasonable.
Okay. Do you know who Dave Marsa is, Mr. Borket?
Yes, I have spoken to Mr. Marsa in
And
previous encounters over water quality.
okay, he's the operations manager at Cascade for the water and wastewater treatment systems, correct?
Yes, my last encounter was when I was putting in a water softener, and I needed to know the level of what was it now? Calcium in the water. So we had quite a conversation on that before I put the softener in. So yes, I know Mr. Mars. I've had communications with him.
Right, and he's kept that the water and sewer systems operating effectively since you became an owner at CVCA?
I have to say, and in his statement they gave to the commissioners, yes, I personally have had absolutely no issues with Mr. Marsa. I think he does an excellent job.
All right, we're almost done with your answered testimony, Mr. Borket. Over on page 51, you indicate that CVCA is not opposed to the use of a major capital improvement account in the future if there's commission-approved project spend. You see that?
Yes, I do.
I think you told me a little bit ago that you didn't have a chance to review the commission's rules regulating water and wastewater treatment facility utilities, correct?
Correct.
And if those rules had provisions in them requiring commission approval prior to spending out of a MCIF, as you've used the term here, Major Capital Improvement Fund, you have no basis to dispute that, right?
The rules are the rules, Mr. Davison. I don't know the rules, so I can't dispute it.
All right, but if the rules do require the commission's prior approval of the spend, that would satisfy your concern in this with respect to the use of this mechanism, correct?
Mr. Davison, if everything was audited and verified, absolutely. That's all we're asking for. We just want the stuff as homeowners. We're the only customer of this utility, pretty much, right? We're the customer. And I have to say that during this whole situation, the person providing the services, unfortunately, never sat down and even talked about all this stuff. I mean, I know I'm going off a little bit of tangent here, but yeah, if everything was audited, I would obviously support it. Support everything the PUC requires, but I would like an independent auditor so we don't have to go through this again. Is that a reasonable request?
All right, so let me turn to your surrebuttal testimony, which has been admitted as hearing exhibit 301 in this proceeding. I just have a few questions for you about that.
Yep.
Okay. Over at page 6 of hearing exhibit 301, the question and answer beginning at line 4, you assert that the 10,000 gallon per month assumption is unreasonable. You see that question and answer there?
Yes, I do.
Okay. Now, do you understand that Right Water Engineers using the 10,000 gallon per month assumption is just a way to normalize the usage and rates for the utilities used for the comparison?
I know they use 10,000 gallons per month to calculate for each of, I think, the 11 utilities, what it would cost for receiving 10,000 gallons a month. Correct. I understand that. It's just, I think that's an unreasonable figure.
No, but for purposes of normalizing the evaluation, the comparison here, does that make sense to use a figure and compare everyone across a similar baseline?
Absolutely.
And since the comparison utilities all have metered systems for their water service at least, and Cascade does not, using this normalized 10,000 gallon baseline is really the only way to make this comparison. Wouldn't you agree?
Yes, but you absolutely, to do the comparison, you need a volume. Fortunately, Mr. Master provided with us the information that enabled us to compare to the compare.
Compare to the compare. Got it. All right. Uh, all right, Mr. Borket, I think those are all the questions that I have for you this morning. Thank you.
Thank you, Mr. Davidson.
Thank you for your time, Mr. Borket. I understand staff is waiving cross, is that correct?
Yes, Your Honor. Staff has no cross for Mr. Burkett.
Great, thank you. And Mr. Borket, I just have maybe two questions for you. The first one is how many months out of the year does your son live at the location?
We're usually there together. In fact, we're going up there. So yeah, he's the same, maybe even less, because he actually has Your Honor, he actually has a job.
Okay,
I'm
understood.
retired.
And then my other question relates to the system development charge or the TAP fee. With the association, or do you support a TAP fee to be used in part for major capital expenditures?
You're talking about the $18 a month or
the $25,000, yeah, the 25,000 TAP fee system development
Okay.
charge.
So what was the question again exactly?
Yeah, do you support that fee to be used in part for major capital expenditures?
As a non-expert in PUC, it's logical to me, yes.
And then would you have, and it's okay if you don't, do you have a percentage in mind of what that fee should be used for major capital expenditures?
To be honest, Your Honor, I can't answer that question. I just don't have enough experience.
And then, sorry, I didn't mean to cut you off. Understood. Yeah, I just wanted to see if you did have a thought on that. And then I guess I do have one other question, and it has to do with meters. To your knowledge, has a customer ever sought a written estimate from Cascade regarding meter installation?
No. Well, that's a really good question. I don't know if we've ever requested a quote, but we have discussed it, because you have a situation there where some of the units are only used, not infrequently, and there are some people that live there. So it's almost like the people that don't live there are supporting the people that do. But I know what it would cost to put meters in.
Okay, thank you. And those were all the questions I have for you. Mr. Detsky, are you comfortable proceeding right now with redirect?
I have some redirect, Your Honor. Two things. One, I'd like to walk through those corrections at some point with you. This might be a good point to do that.
Okay.
And then it might be at that point time for a break before redirect, or I could do it before a break, up to you.
I prefer a small break after you walk through the corrections. If anybody objects to that, let me know. Otherwise, that will be the plan. So go ahead and walk through the corrections.
Thank you, Your Honor. Ms. Lynch, can you pull up, I think there should be in the box now a redlined copy of Hearing Exhibit 305, Rev 1.
Yes, I found it. The title doesn't say Rev 1, but the header does, just FYI.
Thank you. Ms. Lynch, can you scroll down to the second page, Table 1? And Mr. Burkett, can you briefly review the corrections on this page with the judge?
Yes, I mean, I mean, I haven't verified those myself personally. That was done by your assistant today, so I can see there must be some small issues when that was being created. So I have to say, yeah, if those are the right figures, they're the right figures. Does that make sense?
Yes, can you just walk through them briefly? The
Okay.
change of the numbers.
Oh, I got it. All right. So it looks like in 2022, line 2, it was put in as 7297.98, and it should have been 7207.98. And then in 23, the last decimal point was put in as 25, should be 95. And in 24, I think they had 3 decimal points, but it should only be 2 decimal points for 36. Going down to line 5, looks like a typo there. Instead of 789, it should be 780. And at the bottom of the page, I think it's just a small decimal point from 0.29 to 0.28 on that page.
Thank you. Can you please, Ms. Lynch, scroll down? Next, I'm at page 5. Oh, sorry, 6. I'm sorry. My apologies. 6. Can you walk
Oh,
through
yeah,
the changes on this page?
certainly. 1, 2, 3, 4. On line 6, where it says at page 5 has been added. The amount in 2023 was deleted, and that amount was moved over into column 24, and the figure that was in column 24, year 24, actually related to 25, so that's been taken off the schedule. And then she's added a not listed for 2022 on line, what's that, line 9? So yeah, that's it on that page.
Thank you. And Ms. Lynch, can you scroll down one more page?
Oh yes, on that yeah, that first figure there should be 0, not that figure came from a previous year. Yeah, that's correct.
And are the are those all the changes on this document?
What about page 8? Was anything done on page 8?
Oh, you could just look at page 8 really quickly. Thank you.
No, that's fine.
Thank you. And Your Honor, with those changes, we can tender this corrected exhibit 305.
Thank you. And by tender, do you mean it's still just, it's your demonstrative, correct? So you'll
It's the demonstrative, yes.
share, yes. Okay. I appreciate walking through this though. That is helpful. So thank you. Before we up again with the redirect, should we take a break till 10:25? Does that work for everyone?
Yes, Your Honor, I have just one other administrative
Yes.
matter, if you will, before we take our break. I was able over the evening recess to reach out to the consultant at Wright Water Engineers to see if there was an executable version of attachment CLM 9 that you had asked for. And during this morning's hearing, he forwarded to me what I think he represents as that type of document. During this break, I'll take a look at it, but it looks like there is an executable version available, which I'm happy to make available to the commission for this record.
Thank you. Casey, it looks like you have something to say about that.
It actually wasn't about that. It was just
Oh.
to the association. I added the Rev 1 to your title. So I'm just letting you know that I added it to the title since it was on the header.
Appreciate that. Thank you.
Thank you. And so sorry, then Mr. Davidson didn't mean to stop talking about your issue. Yes, if you're able to provide that, then that would be great. Mr. Larson, did you have anything?
Nothing from staff. Thank you, Your Honor.
Great. Okay. Well, why don't we, is 10:25 long enough for people for a break? Okay. All right. We'll go off the record and reconvene then. Thank you.
Thank you.
Tracy, are you set?
Yes, I am.
Great. Okay. We are back on the record in proceeding number 25A-0385W. And I believe, unless the party has anything different to say, what we're going to do is pick up with some redirect from Mr. Detsky.
Thank you, Your Honor. Good morning, Mr. Burkett.
Good morning, Mr. Detsky.
Mr. Davidson asked you about the figure of a 10% rate of return. Do you remember that question?
Correct.
Did the Cascade utility provide a rate of return in this proceeding? A proposed rate of return?
No.
And why do you think that is?
Well, because they were just filing it on the simplified method, just using an annual percentage change. There was no cost to serve, no required return based on the cost to serve.
So do you think the utility is making no return?
Well, if you look at my original testimony, when I used the original figures where they were showing profits, yeah, I considered they were, and I stated in my testimony as such. But that was when the data showed profits, and of course, over time, the profits went from profits to losses. But my original testimony was based on profits.
So you had said that you had noticed something interesting about the 2023-2024 annual reports. You were pushed those questions to this time. What did you find interesting about those reports?
Well, when I looked at the 2023 report, which is required to show the comparatives from 2022, I noticed that the 2022 showed a significant loss. But when I went back to the original filing of 2022, there was attested by Mr. McAlpine, it actually showed a profit for that period. So it went from a profit to a significant loss. I mean, a very significant restatement. And I brought it up because I wasn't sure what the PUC rules are about restating prior periods where there's some sort of notification process.
So, and Mr. Davidson did ask you about whether it's typical in your experience for companies to restate or amend their financial documents. Do you recall that?
Yes, I do recall that.
And you agree that it was a question of degree. Is this a typical restatement or amendment in your experience, or is this the same thing as what you found it normally in your experience?
Well, I think I pretty much my career has been involved with audited financials, and it's very unusual for audited financials to be actually restated. There has to be it can happen, but pretty significant circumstances for that to change. But in this case, the change between, let's take the 2022 original attested statement and the filing as a comparative on 2023, I mean, it went from I think roughly a $70,000 profit to like a $240,000 loss. I mean, over a $300,000 swing. So I would consider it was a very large restatement, and I say I wasn't sure what the PUC rules were about restating prior periods where they need to provide some explanation.
And Mr. Davidson asked you about if you could verify that the financial documents provided in rebuttal now show a loss. Do you recall that question?
Correct.
So what's the difference, or what's the issue in your mind with the rebuttal documents in CLM 10 and why those now show a loss?
Well, obviously, in terms of actually numbers, I mean, the figures speak for themselves. Of course, the major one is the lease. I mean, in itself, it's $180,000, which swamps every other expense on the income statement, previous income statements. And then on top of that, you have the management fees, which obviously we can't understand what they are because they didn't provide any support for it. Then interest is very, very significant. And I think in the case of interest, the calculation was based on certain figures, and those balances used in the calculation of interest weren't consistent with the balances on the balance sheet. So those three factors together pretty much turned the business from what was showing profits into a significant loss.
And you and Mr. Davidson had this brief discussion on the cash versus accrual methods of accounting and why that might be false accounting. Can you elaborate on what your concern is with the cash versus accrual methods that have been discussed?
Well, under GAAP, general accounting principles, you use the accrual method, which means to say that the balance sheet and the income statement consistent, which means the retained earnings reflected on the balance sheet equals the actual earnings on the income statement. So in the context of the filing, and they've admitted that their figures weren't in accordance with GAAP, which actually resulted in me having to do a considerable analysis to try and understand what the differences were. And then they told me, well, those two parts of the financials were on different bases. And that's very unusual to have that. I've never come across that before in my career. Somebody filing any documents where the balance sheet and the income statement aren't based on the same accounting methodology.
You had some discussion about whether the expenses should represent the cost of service of this utility. Do you recall that discussion?
Yes.
And do we know the cost of service of this utility based on the information that's been provided to us?
Not that's been supported by documents, no.
And you had some discussion with Mr. Davidson on the proposal that rates should actually be decreased versus the costs of environmental compliance. Do you recall that discussion?
Yep.
Can you explain the difference between the costs you've looked at and why rates should be decreased versus future costs of environmental compliance?
Well, that statement about the cost should be reduced was actually based on information in the original application where I estimated what the investment was, which is basically the $150,000 plus the purchase of land. And then I looked at what earnings were reported, and I just discovered based on the first submission, before they turned the profits into losses, that at 10% of the capital of the investment, the earnings they actually incurred were higher than that. So I made the observation, based as an accountant, not as an expert in utility accounting per se, that actually they were getting a return in excess of 10%. And that's part of my testimony. Now, of course, since that time, what were profits before are now turned into losses. So now the only way I've really been able to get any sort of baseline is the WWE report, which was part of my second testimony, where I have a table in there where I then actually recalculate based on our volumes of usage, what the bills would be using the same methodology as WWE. And I mean, I can quote the reference of where it is if anybody wants to look at it. But when you look at those figures at the lower volume, our current rates are already above the mean and the average, which suggests that we as a customers are paying more than the median, the average. And then when I use the proposed rates, that would be far above the average.
And one last question. You had a discussion, Mr. Davidson, about the use of 10,000 gallons as a normalized number he used. Do you remember that discussion?
Yep.
And do you have an objection to or what did you find unreasonable? What's wrong with using 10,000 gallons in this instance?
Well, interesting question. First of all, before I read the Mr. Marsa letter, I did my own study following what WW was suggesting, but I used Durango as my base. And I spent a lot of time researching volumes. But then once I saw a letter from Dave Marsa, which stated categorically in his application to San Juan County that the usage per unit was less than 120 gallons a day, and I thought, well, there can't be a better figure to use in a comparison because it's from the person that actually knows what's going on. So that's how I got to the figure of 3,650 gallons in my second testimony, which is I consider that was significantly less than the 10,000 gallons used by WWE.
Thank you. That's all the questions I have.
Thank you. Again, had trouble getting my mute button to turn off. Thank you for your time, Mr. Burkett. I appreciate you being here today. And at this time, shall we move on to staff's witness? Staff, are you ready to tender your witness for cross-examination?
Yes, Your Honor. Dr. DePue appears to be present and ready to be sworn in.
Great. And is it pronounced Dr. Deepu?
Yes. Yes, Your Honor.
Okay. Great. Thank you. Will you please raise your right hand? Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth under penalty of perjury?
Yes, I do.
Great. Thank you. Who was going to proceed first? Did the parties determine that? Oh, I guess it's just the association, correct? Okay.
Oh,
All right. Thank you.
Your Honor, I think only Cascade reserved.
Only Cascade. Yes. I misspoke. Go ahead. Thank you.
Okay. Good morning, Dr. DePue.
Good morning.
Good to see you again.
Good to see you too.
Let's see. At page 5 of your answer testimony, which for the record is hearing exhibit 200, in your summary at lines 17 through 20, you state that the commission should deem the application appropriate for simplified regulatory treatment pursuant to the statutory reference there, section 40-3-104.4. You see that reference in your testimony?
Yes, I do.
Okay. And the annual rate adjustment option that's provided for by the simplified regulatory treatment chosen by the company, or one of them, is provided in Rule 5112 small e Roman I of the Commission's water rules. Is that correct?
Yes.
And that simplified regulatory treatment option, as you understand it, provides for annual rate adjustments going forward pursuant to a prescribed formula set forth in Rule 5112 small e capital B. Is that correct?
Yes.
Okay. Now you go on at page 6 of your answer testimony, at lines 1 and 2, to suggest that the commission should deny the proposed surcharge for the reserve account for major capital improvements. You see that reference?
Yes, I do.
And that reserve account for major capital improvements option is provided for by Rule 5112 small e Roman 4. Is that correct?
Yeah, that's the rule that provides for this application, but it doesn't support $18 per month.
Got it. Thank you. And then at page 6, lines 3 through 5, and the last of your recommendations here before we get to the rest of the testimony, you recommend that the commission deny the one-time rate increase sought by the company and system development charges, quote, for lack of sufficient justification at the time you filed your testimony, correct?
Yes.
Okay. Now let's move on from your summary to pages 14 and 15. And there, at lines 2 through 5, you state that staff supports small water companies planning for capital expenses required for safe and reliable water and sewer service, correct?
Yes.
Okay. And at page, excuse me, 15, lines 1 through 3, your concern at the time you filed your answer testimony was that the company had not provided enough support for the $18 per month surcharge to be deposited in the major capital improvement fund, correct?
Yes.
Now, in preparation for your testimony today, have you reviewed the company's rebuttal testimony and accompanying attachments?
Yes, I did.
And if we could turn to attachment hearing exhibit 103, attachment CLM9 to Mr. McAlpine's rebuttal testimony. And let's turn to page 3 of 7. And right there, just below, in the second entry below 2.3 utility expenses entitled near-term water project cost. Do you see that paragraph, Dr. DePue?
Yes.
Okay. And there, in this report from Wright Water Engineers, it lists a near-term water project cost of $520,000 and a near-term wastewater project cost of $720,000, correct?
Yeah, that's their estimate, yes.
Okay. And recognizing that this information only was provided in response to your answer testimony and wasn't available before you filed your answer testimony, would you agree that those capital investments answer your concerns regarding the use of the capital improvement fund and proposed surcharge?
Partially. They provide the extent of capital required, but they don't provide how that would support $18 per customer per month.
Okay.
And for the duration of time that it may be in effect.
Okay. Now, turning over to page 6 of 7 of this attachment CLM 19, and I apologize again for this. I was able to determine that I can provide an executable version of this document, Your Honor, for the record, and I will perhaps do so as a late filed exhibit if that's acceptable. I have to work with Ms. Lynch to get that properly marked and included in the record, but I can do that at the conclusion of the hearing if that's acceptable.
That is acceptable for me. Does any party have an objection to that? Okay.
No objection.
Thanks.
Okay.
Thanks.
No objection if he could provide a copy to us as well.
Yeah, I believe it would be uploaded to the box folder.
That would be the intent, Your Honor. Yes.
Sorry, quick interjection. My instructions about adding it to box were if you were going to move forward submission during the hearing. If you're not going to do that, if you're going to file it sometime later after the hearing is over, you'll need to e-file it.
And I can certainly do that, and that way all parties will be served, Your Honor, if that's the easiest method to do so. I can do that later today after we conclude the hearing.
That works here, and Casey, sorry for misstating the process there. Thanks.
No. Okay, where did we leave off here? Did you have it, as difficult as this is to review the screen at the moment, Dr. DePue, did you have a chance to review this portion of the Wright Water Engineers report?
This was provided to us in not an executable form, so I couldn't check the veracity of the numbers or the computations.
Oh, okay. But did you review the information that was there?
Mm-hmm. Yes, I did.
And did you see that that portion of the report provides an estimate of the use of funds for capital improvements and a timeline going out through, I believe, 2055?
Yes.
Okay. So based on the review you were able to do of the Wright Water report CLM-9 regarding future capital expenditures, would you agree with me that the companies addressed the concerns you raised regarding the estimates and the timeline for those expenditures?
Estimates, yes, but timeline as to how long from the date of effectiveness of this tariff would $18 continue to be collected from every customer?
Let's go over to page 22 of your answer testimony. There at lines 12 through 16, we can scroll up a bit there. You state that you agree with the company's argument that inflation has led to increased costs for the company, correct?
So this might be more like utility rate making 101, but typically the costs recovered from rate cases have components like operations and maintenance costs, depreciation, interest, and then return on the rate base. I think it's typically only the operating expenses that affect the others.
Dr. Depew, you're cutting out a little bit for me. Is it just me?
No, I was going to say the same.
I was
Okay.
going to say the same as well.
Okay.
I heard you say utility rate making 101, and then after that, I heard about every other word.
Okay. So I can repeat. Typically in the utility revenue requirement, the components are operations and maintenance cost, depreciation, interest expenses, and then rate of return applied to the rate base. Typically, only the operations and maintenance expenses are subject to inflation. All other factors like depreciation, interest costs, and rates of return, which include the rate base that also accounts for accumulated depreciation, can subject to how much investments have been made, what's the market condition, could all be open-ended and may not depend entirely on inflation.
You also state at this page of your testimony that having not adjusted rates since 2012 justifies that the commission, quote, reconsider the company's current rates in light of the passage of time since the last rates were approved. See that reference?
Yeah, that just a statement of the idea that the commission should be open to considering rate cases when time elapses between the consecutive rate cases.
And by using the term reconsider the current rates, do you mean the commission should approve a rate increase if the company justifies it?
Yeah, if the company justifies it, yes.
Now, over on page 23 of your answer testimony, you acknowledge that the company's provided additional evidence of its financial position in support of a rate increase. You see that reference at lines 6 through 11?
Yes, it did provide the restated financial statements, yes.
And you had a chance to review that restated financials, I think attachment CLM 10 to hearing exhibit 103.
Yes, but I think since then there has been further revision of that document, and like everyone else mentioned in this hearing, that the two parts of the financial statements were based on two different approaches to accounting, cash and accrual based, and that's one of the concerns that staff had, that information wasn't reliable enough.
Okay, and at page 25, lines 11 through 12, as an example of the corrections to the company's financial information included in attachment CLM, one of the criticisms of the previous financial presentation was that the net income amount values, quote, do not match between the profit and loss statement and the balance sheets. You see that reference?
Yes, I see that, and I think it still is correct that the document that was provided to us before I filed the answer testimony, that was true.
And the document that I'm asking you about now that was provided after your answer testimony, CLM 10, at page 4 of 6 and 6 of 6, and we can pull that up. those values do in fact match in that financial presentation. Is that your recollection?
Yes.
So that issue has been corrected with respect to the net income values that you referenced at page 25.
Yes, that's been one of the concerns that I stated, but I do also believe that the concerns raised by the association are also valid, and I think the company has not been able to provide justifications for all those concerns raised. In my list, I just cited a few of the concerns, not all.
Okay. Did the remainder of the information in attachment CLM 12 address those other concerns that you have listed here at least?
Yes.
And it's section 5, Roman 5 of CLM 10, and we can scroll back to that if that's helpful.
What page?
Excuse me, section 5, I think it's maybe page 3. It's in the text portion here. Yeah, there we are. Excuse me, do you agree with the statements made in section 5 of CLM 10 that the restated income statements, quote, more accurately reflect the utility's operating cost structure and financial performance during the periods reviewed?
I do not, because the report itself has a disclaimer that says they have not verified it and they have just stated what they have been provided.
So while they haven't verified it, you have no reason to dispute the fact that, at least in this section of the report, the accountant indicates that the information is more accurately reflects the utility's operating performance.
That's what they have stated. I have no reasons to dispute that.
Okay. And then if we scroll down a little bit further, oh yeah, exhibit or section 6, regulatory considerations there. There it's stated that the adjustments support equitable treatment of current and future ratepayers and are consistent with the Commission's expectations regarding prudent cost recognition and financial reporting by regulated water utilities. You see that statement?
Yes, I do see that.
And do you agree with it?
Not really. This is a CPA firm, perhaps with no qualification mentioned on this letter about their experiences on utility rate making. So an overarching statement making this statement that this restated financial statements are more equitable and also address intergenerational equity issues seems like an overreach.
But this is an independent accounting firm with no financial stake in this proceeding or any interest, isn't it?
I have no reasons to believe that that would be incorrect, but I do still believe that this is an overarching statement from a CPA firm.
Okay. All right, those are all the questions I have for you, Dr. DePue. Thank you.
Thank you.
Thank you. And I had a couple of follow-up questions for you. Thank you for your time, Dr. DePue.
Thank you.
I mean, you did address some of them, so I will. So if I understood what you were saying about inflation, when and the underlying factors that are considered in utility rate making, what is your thought relative to Cascade's initial statements regarding an approximate 2% a year increase of the rates from 2012 to now because of inflation? Does that question make sense? Okay.
Yeah, the question makes sense, Your Honor, but I think that's back of the envelope kind of computation that shouldn't be a basis for commission's approval for new rates, right? So like I mentioned, the components of revenue requirement for a utility include operations and maintenance costs, which includes salary expenses for salaries and wages for people who work with the firm. So they are typically subject to inflation. But depreciation is not subject to inflation. It's based on the historical cost. And if the company has not been making more and more capital investment, depreciation stays the same. Then interest expenses, if you haven't borrowed, then there's no interest expense. But if you have borrowed that to perhaps a decade ago, the interest costs remain based on the interest rate prevailing at that point of time. It doesn't get changed to higher interest rate that we experienced today. Again, on the last component of the revenue requirement, which is rate base less the accumulative depreciation, the rate base would not.
Dr. Depew, you cut out just a little bit. Repeat that last sentence, please.
Okay, yeah, so the final and the last component of revenue requirement is the rate of return, which is applied on rate base. And like I said, if the company has not been making capital investment for decades, the rate base would come down. Eventually, we don't know exactly how much impact that would have. And therefore, the sum total of all these components of rate making that I talked about can go either up or down depending upon how big the components are.
Okay. Thank you. I do appreciate that. And then if I apologize if I have if you directly addressed this and I just missed it, so forgive me. As it pertains to the proposed system development charge, after reviewing all of the materials, including the rebuttal and surrebuttal, what is your position regarding that request?
Yeah, so I don't think that I still understand the justification for it. So yeah, in my mind, the burden of responsibility of justification.
And you're cutting out again. I heard you say in my mind.
Yeah, the burden of responsibility of providing justification rests with the company, and I don't think they have met that requirement.
Okay. All right. Those were all of the questions I had. Not sure if there's any redirect for you though from Mr. Larson.
Yes. Yeah, just a few, Your Honor. Mr. Depew, or Dr. Depew, you were asked some questions at the front end by Mr. Davidson about your recommendations made in answer testimony, and with the understanding that there's been a lot of new evidence presented since you filed your answer testimony, both in rebuttal and in the context of this hearing. Can you tell us whether your base level recommendations in that answer testimony have changed?
Yeah, so my recommendations are twofold. One is in terms of whether the company is eligible for simplified regulatory treatment or not. And that is exclusively based on the rule, which states that a company which is owned by a few persons, can be an illegal entity, has customers less than 1,500 in number. So that's just one criteria eligibility stated in our rules. And I do believe that whether it is 160 or 170, the number is still lower than 1,500. So the company is eligible for simplified treatment. That said, before we set the plane on autopilot, excuse my metaphor here, but before we set the plane on autopilot, we need to set the flight path. And the rates that we have in place right now, they are not the candidates for automatic adjustment henceforth. So eligibility is yes, the company is eligible for simplified rate treatment methodology, but whether those are applicable to the current rates or the proposed rates, that needs to be established separately. And I don't think the staff's recommendation is that the current rates go on automatic adjustment. And likewise, the second aspect of our recommendation is to deny the rate increase proposed, as well as the contribution.
If you could repeat, I heard you say deny the rate increase as proposed, as well as the
Capital Improvement Fund, $18 per month per customer.
Dr. DePoo, one more time, please.
I'm sorry, I don't know why my internet has been sketchy today. Yeah, I stated that the staff's recommendation is to deny the one-time rate increase and also to deny the $18 per month per customer contribution.
I think you started to cut out there just at the very end, but I think, did everyone get that, just to for the record? Okay, so and just one more follow-up on that point, Mr. DePoo, Dr. DePoo. So just to make really clear, staff is not recommending that the annual adjustment mechanism be applied to any rates in this proceeding, whether it's the rate that the company is requesting or the current rates.
Yes.
Now, you were asked some questions by Mr. Davidson about the most recent information we received from Wright Water Engineers as part of the company's rebuttal case. And I think you made a few different statements about the veracity or whether staff can rely on that document. But I just wanted to give you an opportunity to maybe just expand a little bit on why you continue to feel that that has not supported the company's case.
Yeah, so I think in the report itself, the engineers have provided estimates, but they have not provided basis for those estimates, whether it is based on some contractual negotiations that the company may have engaged with, have they started the procurement process, and those are the bids that they have received, or those are based on some industry-specific standards where procurements can be benchmarked to similar kind of projects.
Dr. DePue, you're cutting out there. Specific standards where procurements can be benchmarked or
benchmarked to the industry, or is it some reports that they have relied on? The other aspect is that these estimates do not have the level of accuracy. So typically in utility rate making, we have seen cost escalations, and typically those are also specified in engineering studies as to what level of degree of confidence they have in those estimates. Now, the numbers that have been presented are very deterministic. We don't know if the company would vouch that those numbers would not change in future. And then, obviously, we have no idea how much of that money has already been spent.
And just sticking on the capital improvement fund for a moment, besides what you state is the company's inability to justify the actual number, are there other concerns with that particular mechanism going forward with this company from staff's perspective?
Yeah, so we would like to see that, if let's say CDPHE has a certain mandated improvement required in the system, and that takes, let's say, the amount of estimated capital that WWE has presented, how long will it take for the customers to provide for that fund. That should clearly state in terms of number of months in which this additional fee will be collected by the company. It cannot be an endless contribution. And to what extent would these assets be useful? When will they be ready? How well they are spent? Is there a reporting requirement that the company wants to propose for the commission to make sure that the monies that are being collected in the name of improvement fund are indeed being spent for that, and the quality of asset is being created in a way to be used and useful for the ratepayers.
And just one question for you on inflation. I know Mr. Davidson had brought this up with you, and I know you clarified it a little in response to the ALJ, but I just wanted to make very clear, should your testimony today or an answer testimony ever be understood to say that inflation alone is sufficient to justify the rate increase that the company's requesting in this case?
No, and I think the company itself has stated in some of the reports that the proposed rate increases will not make the company good. I don't remember exactly which document, but they have said that the proposed increases will still have the revenues matching or falling short of operating expenses. So it's hard to believe that the company can propose justification exclusively based on inflation when they know that that kind of proposed change would still not make the company's financial good enough for continued financial integrity.
And you teed up my next question there on the financial statements, and you were asked some questions by Mr. Davidson about the updated or reclassified, restated documents that have been received throughout the course of this case, and acknowledging that that's been sort of an evolving process. Could you explain maybe like which set of financial information that we've received throughout the course of this case would staff be most inclined to rely on in order to decide whether this should be approved?
So I think the frequency of changes in the financial information provided itself is a concern. And like the association witness mentioned, the swing from about 70,000 profits to about 200,000 loss on a revenue base which is equal to close to about 200,000 is a huge discrepancy. And we would like to see audited statements where the auditors attach their reputation and expertise to the opinion they express about the financial statements. As of now, I think, like you mentioned, the financial information has been evolving, and we don't know if there are more classifications coming in, because yesterday when we heard the testimony of Mr. McAlpine, he kept on mentioning that some of the numbers are not reconciled, so there may be more reclassifications needed. So I would not be able to rely on any of these financial statements unless I see audited statements.
And what does staff make, given this evolution of the original financial information that was provided with the application in September of this year?
Yeah, so based on the initial information provided, the company did appear to be making healthy profits, a reasonable rate of return, perhaps slightly on the higher side, as we have seen in other water utilities and electric and gas utilities. So that certainly was the opinion that staff had looking exclusively at the original statements, that the rate increase proposed may not be necessary.
And just one final question for you. There's been a lot of discussion, not only in the Mr. Davidson's questioning of you, but just throughout this hearing about this cash versus accrual basis issue with regard to financial information. And I just wanted to give you an opportunity to maybe just explain that sort of discrepancy and how that might cause problems for staff's review.
Sure. So I think Mr. Bucket mentioned that too. Typically, the US GAAP, GAAP stands for Generally Accepted Accounting Principles, do not provide for two different sets of financial statements based on cash and accrual basis. Accrual is typically the standard. There are some exceptions made, particularly to government agencies where cash-based accounting systems are allowed. Now, if you look at accounting from the very basic perspective, all the transactions are recorded and then respective accounts are created. And then a trial balance established, and based on whether a particular account goes into profit and loss account, whether it is operating kind or whether it is asset or liability kind, then based on the trial balance, you draw financial statements, which could be P&L and balance sheet. Now, it's very difficult to understand that from the same trial balance, you could draw one financial statement based on accrual basis and another one based on cash, because the transactions are not recorded on whimsical basis. You have to set the default standard cash-based or accrual-based. So I think it is very difficult to understand that, you know, a CPA firm can attest to a set of financial statements which are based on two different accounting principles. And since they have stated in their own, perhaps the second version that we received just before the answer testimony, that they have not verified it, goes on to state that those numbers are not reliable.
Dr. Depew, can you say just that last sentence again, please?
Yeah, in the CPA's letter that was provided to us just before the answer testimony, which I believe has been revised again, but the version that we had in that letter, the PMJ expressly mentions that they have not verified the accounts.
Thank you, Dr. Pooh. No further questions from staff.
Thank you. Dr. Depew, thank you so much for your time today. Thank you to everyone for all your time. I think that brings us to the end of the evidentiary portion with one exception, which is that Mr. Davidson, if you could provide the CLM 10, the page 6, the executable, you
CLM
could
9.
upload that.
Yes.
Okay, thank you. CLM 9. If that could be updated by the end of the day today,
Yes.
into e-filings, that would be great. And then Mr. Detsky, 1 second. I did want to go through what I show as all the exhibits being, so we can go through that. But Mr. Detsky, if you would like to, before we do that, feel free to say whatever it is you wanted to say.
Yes, thank you, Your Honor. I have two things. The first is that during cross-examination yesterday, Mr. McAlpine said that they would file the executed and recorded hearing exhibit 124, the Alpine Bank loan. And so we're still waiting on that. There might have been one more thing he said he would file, but I don't have that in my notes. So that's one other question I had on exhibits.
And Mr. Davidson, are you able to get that? If it's going to be uploaded, let's have it done by today. I want to make sure we have a cutoff for the evidence for today by close of business. Does that work for you?
I'll have to check, Your Honor. I don't have that document. I'll have to see what its availability is, and as soon as I determine that, I will, if I can get it, I will make sure it's filed.
Okay, all right, and then Mr. Detsky, you had a second thing, and then Mr. Larson, I'll get to you.
I did, and this is in the nature of a request, but also you had said yesterday, I believe, that the statement of position would be due May 4th, next Monday. And at least for my purposes, it will be really important to review the transcript. And I don't know when we'll get that, but maybe if the reporter could let us know when we expect the transcript, I would ask if Your Honor would consider setting the SOP deadline to be a week after we receive the transcript.
I will, the only extension I can give is to Tuesday the 5th. And I have talked with the court reporter a bit. You will be able to get it before. And I have to put, I gave the parties a very extended amount of time in the hopes, and it's okay that things didn't settle, but we're coming up very quickly on the statutory deadline. So I have to get the decision out very quickly after this hearing. And so if the parties want their statements of position to be evaluated, then they have to be in by close of business Tuesday, May 5th, which is a day I spoke with the court reporter yesterday after talking to the parties. And so it will need to be Tuesday, May 5th for that by close of business. And again, we're coming up very quickly on the statutory deadline. And so there just is no more wiggle room for extensions of time in that regard. So if you need to do it more akin to the way a closing argument would be at a live hearing, you know, where it's not written, that's fine. You can make references generally if you need to, if you're not able to adequately review the transcript in times. But that is the fact of the situation where we are. So we're just going to have to proceed that way. Mr. Larson.
I was going to ask for the same thing, Your Honor. So if that's all we can do to May 4th, then we will make that work.
May 5th.
Oh, May 5th. Apologies.
Yeah, I had said May 4th yesterday, and then I was and I would like them to be again 13 pages, but you can add the caption, that doesn't count caption, certificate of service, that sort of thing, so I can get those evaluated. And yeah, highlight what you think is important. We were working behind the scenes to see if there were specific things that we wanted you to address, and I don't think we have specific requests actually for the statements of position. So I will take what you have to say, and I will review it all and evaluate it all. And did any party have any other staff? Did you have any other items?
No, that was all from staff. Thank you, Your Honor.
Oh, I wanted to go through the exhibits just to make sure we are on the same page. So what I show as admitted is all the pre-filed here exhibits as well as the hearing spreadsheet, with the exception of the first 6 items listed on the spreadsheet. In addition, I show that we admitted hearing exhibit 100 revision 2, which is the direct testimony of Charles Lindsay McAlpine. Hearing exhibit 102, which is the application. Was that actually revision 1? Hearing exhibit 2, revision 1, which is the application. Hearing exhibit 102, revision 1, attachment 1, the articles of organization. Hearing exhibit 102, revision 1, attachment 2, the compliance advisory letter. Hearing exhibit 102, revision 1, attachment 3, which is a proposal from Whitewater Engineers. Hearing exhibit 102, revision 1, attachment 4, a profit and loss statement. Hearing exhibit 104, revision 2, CLM 6. Hearing exhibit 304, which is a discovery response. Hearing exhibit 306, which is the erroneous filed attachment, CLM 5. Hearing exhibit 309, which is a discovery response. Hearing exhibit 310, the 2022 annual report. Hearing exhibit 311, discovery response. Hearing exhibit 312, San Juan County Cascade Meadows meeting. Hearing Exhibit 316, Moorhead Property Statement of Foreign Authority. Hearing Exhibit 318, a discovery response. Hearing Exhibit 319, promissory note. 320, promissory note. 321, promissory note. 322, promissory note. 323, promissory note. 324, promissory note. 327, financials and annual report. At 330, Grizzly Peak rate change notice, and 331, a discovery response. Now, of course, all of these are going to be listed out with actual titles. I was just truncating them for purposes of this list. In addition, then we will potentially have CLM 9 and Hearing Exhibit 124 added if those are provided by 5 o'clock today. Does that comport with what the parties have?
Didn't hear you list Exhibit 101, which was the direct testimony of Dave Marsa and attachment DM1, Your Honor. And hearing Exhibit 103, the rebuttal testimony of Mr. McAlpine and the attachments CLM 7 through 10.
Are those in this spreadsheet?
Yes, they are. That's what I was going to chime in. Those are all on the spreadsheet.
Okay, that's fine then.
Okay. Mr. Detsky.
Yes, thank you, Your Honor. I didn't hear you say Exhibit 305, Rev 1, which is the demonstrative.
And you want to admit that into evidence?
That I thought we did that yesterday.
And I'm okay with admitting that into evidence. I didn't understand that to be the case. Do any of the parties object to that?
No objection from staff.
No objection, Your Honor.
Okay, yes, so thank you for that. I will add that to the list as well. Why I like to do these in case we had a little miscommunication about what has happened. It's good to get it worked out, so we're all looking at the same stuff. Okay, so with that, does any party have any other items to discuss before we close the proceeding?
Not on behalf
Staff?
of the applicant, Your Honor.
All right, well, thank you. Thank you for your time. I will get the statements of position and I'll issue a recommended decision that in writing in the near future. And so this portion of the hearing is completed and we are going to go off the record. Thank you everyone for your time today and yesterday.
Thank you, Your Honor.
Thank you, Your Honor.
Thank you, Your Honor.